I'll tell you, investors have a lot to juggle right now. Outside of trying to put together all these geopolitical pieces, we are very busy with companies reporting quarterly results. What is the general mood in the markets? I should point out that with corporate profits, at least in the United States, the fourth quarter numbers are still anticipated to be the best Q4 stretch in several years. Joining us with more on the markets is Laura Lau, who's Chief Investment Officer at Brompton Funds. Laura, it's great to see you.
Great to see you again, John.
Never a dull moment in the markets. Even sitting in here and just getting back into the thick of it, it's amazing. There's so many moving parts. Let's start with earnings season, because I think at the end of the day, if you saw all this flurry of action in Washington, but on Wall Street, if companies were missing expectations, there'd probably be a different mood in the markets. What are you seeing in bottom line performance right now?
So far we've seen the big banks report, and the numbers have been spectacular. Capital markets activity has been good. Loan losses, we're not really hearing any issues there. So far, it looks like all those animal spirits are showing up in the financials. And so far, the results have been good.
And do you feel like you need to see across the board sector strength to feel positive about the market overall? I only ask because, we got like Netflix is set to report quarterly results, so we'll start getting a taste of tech. And then, of course, there's all the parts and pockets of the market that are tied to what consumers are up to or, how much they're willing to spend.
So far, what we expect is those cyclicals to perform well. The economy is doing much better than expected. Looks like we're getting that soft landing. And then with higher long-term interest rates, those hurt more the defensives more, like those utilities, telcos more.
And how do you then take sort of that landscape and try to figure out how other variables like the tariff threat or how central banks respond and what they do with interest rates as a result, especially when some of those sectors might be interest rate sensitive sectors for investors? So
what we're starting to see is that the bond market is sniffing out that Trump is inflationary, tariffs are inflationary, deporting immigrants, whether legal or not, is inflationary, and more spending tax cuts are inflationary. And as a result, those 10-year rates are going up. And the Fed is also waiting to see what the results of all the tariffs are before cutting rates. So I think that everybody's just watching and seeing. But as I said, we are seeing the bond market sniff out higher rates.
I'm glad you brought that. I'm not sure if our control room is able to show the U.S. 10-year Treasury yield, but one could make the argument. I know it's hard to ignore all the noise that's coming out of D.C., but maybe you should also be just checking in on this from time to time to see what the bond market's mood is like.
And also, tariffs, if the U.S. puts tariffs on other countries or even threatening to do, what typically happens is the U.S. dollar goes up and the other currencies go down. And I think Trump doesn't want too strong a U.S. dollar. He has been accusing, in this first term, other countries of currency manipulation. But the truth is, when he talks about higher tariffs, his dollar gets stronger and the U.S. becomes less competitive.
So let's dive in then, with all this said, to Laura Lau's portfolio strategy. With all the cards you've got in front of you right now for 2025, what is your overall playbook?
So right now, we like financials because of deregulation. We do think that capital levels have been going up since the financial crisis, and we believe that they will be going down now because of deregulation. And, are these stress tests legal? We'll see, because the banks are actually challenging the Fed on that. And the other things we do like is he's been drill, baby, drill, which is great for the energy sector. But the truth is the oil and gas sector, there's been substantial consolidation. So I do think there will be production increases, probably not as much as people expect, and I think more on the gas side than the oil side. But as a result, those that benefit from higher volumes, like pipelines, I think will do well. We're seeing this AI infrastructure build. I think that will continue. The big tech companies have great balance sheets, and they're going to be continuing to support that capital spend. So we think that there are pockets in the market that we think will do well.
And does that mean, if you had to lean more Canada versus the U.S. or more U.S. versus Canada based on that sector makeup, how are you feeling about which market stock market has more legs to move higher?
So Trump is all about making America great again. So we do think that with all the noise and the tariff noise, we do think that the first half of the year, the U.S. will do better. But Canada is more cyclical, and we are actually a much cheaper market with higher earnings growth than the U.S. So as a result, I think towards the second half of the year, when we have a better idea what's happening with politics, what's happening with tariffs, that Canada can outperform.
Okay.